Welcome, everybody. We have no government, but apparently that is not a problem for the stock market because things just keep going up and up. My name is Michael Camo, and I am here with Derrick Oldensmith and JR Romero. Sami Abusaad is serving a 1-week suspension. We cannot discuss why, but Sami is expected to be back 1 week from today. So how's everybody doing today? Everybody enjoying this big, beautiful bull market?
Good times.
It never ends. It's might be the strongest market I've ever seen, just in terms of the way that you don't even pull back 0.5% at the index level for anything. I've seen some really strong markets over the years, but what you get is that nice little 1 week pullback once per month, and then that sets things up for the new highs. And traditionally we were always taught that an uptrend is a pattern of higher highs and higher lows. It's coming out the window now. It's just highs and highs and more highs and further highs and continued highs and the next level of highs. And we actually were down overnight. Futures were down last night, and then they're like, "Oh, we can't do that. We can't do that." So now we're green.
JR, you look very young.
I'm a 50-year-old man. What are you talking about?
I just noticed. I don't know. Maybe it's like your hair and you're like sort of shaved, but I was like, oh my God, it's babyface JR.
I get my ears lowered once a month.
Cool. So I don't know how the hell, maybe somebody in the audience can help, but how the hell do we even talk about the market anymore? Because it's like, it just keeps on going up a little bit and then it pulls back like 0.25% and then just keeps on going back up. So JR, how the hell do we talk about this anymore?
There's a thing the market does when it doesn't go up, and I've sent my traders on an archaeological expedition to figure out what that word was. It's been lost in the sands of time. It sounds like bullback, but I don't think that's it. When it doesn't go up, there's a word for that. I don't know.
But we heard it was supposed to be, September's always a volatile month, and that lasted for like 3 hours or something.
Nobody knows, boss. Look, this morning, the S&P's had a shakeout. I told my traders, get ready to go along the S&P futures. This is a classic phase C spring, and we're gonna rip to, we're probably gonna rip to the 30s. The 67.30 secondary target, 67.43, and we're printing 45. It is what it is. Just let it happen. Just let it happen. That's all I got to do.
Like, why are people so afraid of the good times? Can we not just enjoy it?
Just let it happen, man.
But I don't know. I feel like everybody always wants to talk about this, the theoretical other shoe that is about to drop. I mean, maybe this government shutdown, maybe having no economic data is the best thing of all.
I mean, look at SNDK, for example. I've been really leery of shorting the storage names, but this morning you had a climatic shooting star and we're gapping low in the pre-market. I was like, okay, this is a gimme. This is going to be like clubbing a baby seal. And I was long Coinbase and Robinhood in the pre-market, short SNDK. And the market opened, I was like, row, and they're just spitting these things up. It's out of control, man.
Listen, you cannot short any tech stock from the 90s. You cannot short Western Digital, Micron, friggin'
It's like a made man from the mafia. It just can't be done.
It is like I think there is a cosmic element because even, the 90s, like the Backstreet Boys are doing the Sphere in Vegas. Like my sister just went. So little kids are wearing Nirvana shirts they got at Old Navy.
Yeah.
There's something about the 90s that is in the air. So, yeah. So, all right. So we're kicking off Q4. The S&P is up about 15% this year. We're coming up on almost the 1-year anniversary of Orange Man coming back to the White House. Like, is it even possible to make any kind of outlook or prediction?
Yeah, Heimer.
I don't want to. I'm not good at telling the future. I'm very good at figuring out what to do now. I've made a fortune in life doing that. I don't care. As long as it goes up or down and not sideways, I'm good. I don't care. I don't spend any time thinking about it. I don't care. It's just going higher. Why? Who cares? Now, after hours, I think to myself, okay, margin debt's through the roof. Like we got triple ETFs everywhere, highest participation of retail traders ever. Like there are big problems in the background. Okay, somebody's gonna get hurt real bad. We're gonna have some stupid self-inflicted crisis soon enough. Okay, but I can't stop that from happening, and I'm not gonna get hurt by it. So I might as well just ring the register while I can. This is not healthy. Obviously, like if you look at the SNDK chart, okay, like something seriously wrong here. But you know, when we come in, it's going to be really, really bad. It's going to be very, very bad.
I think let me know if I'm breaking up. I think I'm having some internet problems here, but I think JR just said it perfectly. This market's not healthy, in my opinion. The way that it's moving, the way that it's going up, the fact that you can't get more than a 0.5% pullback. I do think that there is a massive risk to the downside right now, but it has to trigger. And if it doesn't trigger, we could just keep doing this. We've been doing this. September is the weakest month of the year. Guess what? We just had the strongest September in 15 years. October is marked by a lot of volatility. Guess what? We're already off to a blast. You know, it doesn't matter if the government is shutting down. So I do think that there's a massive amount of downside risk, but it has to trigger. If you can't get below, as of right now, S&P 6,500, which is no indication that's happening anytime soon, you can't trigger the unwind, and this up grind can just continue. So why fight it?
And even if you even if you get through 6,500, there are some huge liquidity levels in the SPX. The S&P is like 6,360, 6,460. Like, good luck getting through that. You know what I mean? There's a lot of people still not fully invested in the market. I can't imagine what it must be like to be a money manager in this environment. Like, what excuse could you possibly come up with for missing the greatest rally since 2020? You know, the pressure these guys must be in to get involved on any pullback to a high liquidity level must be enormous. So, you know, good luck getting through 64.50, 63.63, not to mention like 52.97. Like, are you kidding me? We would need a massive, change, change in how we're a massive catalyst, a massive change in how we're pricing the market for that to happen.
We're talking about these levels that were 3%, 5%, and 7% away. Try just getting the market through yesterday's low.
We haven't had a 2% pullback in like 160 days, bro.
So I mean, who are the biggest winners of 2025? I mean, in terms of investors and traders, is it just trend followers?
It's trend followers, it's retail, and it is the corporate executives of the S&P 500 companies.
Yeah, because I mean, like JR said, it's like if you're a money manager and you have like a Harvard MBA and you're managing $10 billion and you're constantly reading about whatever blah blah macro issues, the S&P is overvalued, the PE is whatever, above, like at its highest level ever, you know, the CAPE ratio, the Buffett indicator, and meanwhile friggin' quantum computing stocks with like $64 in revenue have $20 billion market caps. So I think this is just going to be, I think we're just going to bitch and moan.
Yeah, there's a great performance chart that Goldman put out. I don't remember if it was for the month of September or for last quarter, but it was like, I think it might have been the month of September. Yeah, the S&P is up 4%. Mag 7 stocks are up like 6-7%, but the quantum basket's up 61%, and Bitcoin related stocks are up 47%, and recent IPOs are up 32%, and the non-profitable tech basket of companies is up like 27%. I mean, it's a hell of an environment, that's for sure.
Yeah, I actually I have a screen I can actually share, which is this is probably like my favorite screen of all time. So these are companies with like high market caps and no revenue, and
I'm
like
just showing my positions.
oh whoops. Okay. Yeah. Okay. So yeah, like these are basically all bullshit stocks, and they're up like crazy today. Like I mean, I don't know about you guys, but I
Every day.
remember even yeah, and even like it was interesting last week. I don't know if you guys saw it. So that Martin Shkreli interview where he torched that guy on quantum computing stocks, and I was like, I wonder if this will actually like break those stocks, and even that lasted like a day. So day to day, how are you guys actually approaching the market? Like when you come in the morning, like are you operating with the base assumption that we're just going to zoom on up?
No.
No? Why not?
No. You can never assume anything. It's the market. Uh, I mean, it's been relatively easy for me to trade. The pre-market's been out of control. Today was the first time ever I had a red pre-market session. Usually we're catching these ridiculous Bitcoin treasury names that go from $3 to like 10 or 7 or $14 in like 12 minutes. I mean, it's absolutely insane. And then the rotations are pretty easy to read in this market. You just have to watch sentiment, and you have to watch the groups, and you just stick to whatever's moving and stay away from the chop. And it's been a winning formula. I'm having my biggest year since 1999. I mean, it's absolutely insane.
Okay, so Derek, so how are you approaching it day to day? Like when you're coming in the morning, like what are you looking for?
Yeah, so it seems like there's two sets of stocks that are really just every day ripping and continuing and moving. And those are on the one cohort, the AI and AI related stocks, NVIDIA and all. And on the other hand is this like retail universe of these junk stocks that you were just talking about that I feel like JR is talking about that are all over the place and give tremendous short-term trading opportunity. Um, so, my own bucket of how I trade, I do bits of both, right? Like I like to trade that stuff that moves. JR is probably the guru master of it. Those crappy stocks when they're moving, they can provide a lot of opportunity to make money. But then I also my new traditional approach to markets has always been a top-down approach. I'm starting at the index level, trading more correlated stocks and working my way down from that point. And that I actually think has been hard because I can't get myself to really lay into like big picture longs in the S&P, the Nasdaq, or God forbid the Russell, or any of those heavily market correlated stocks at these price points, at these levels, when we haven't had a single pullback. And that's tricky. But trying to short it just means you get your face ripped off. So every day, I'm not necessarily coming in with the default mode. It probably should be that we're going to be higher. I'm coming in with the default mode of, all right, the trend is still up. When do I want to actually put real shorts on that are market related with size? And that's really only on the way down. It's if support levels could break. Like I told the team this morning, and he was like, look, we're gapping down this morning over this government shutdown. Government shutdowns traditionally really aren't bearish. There's a good chance that we just get immediately bought back. But if for some reason we don't, the first support level is 662 in the SPY. And if we're above 662, I'm not looking to heavily short the market. Maybe I could find some cute little pivot highs for little day trades, and we had a couple of those call outs today that worked okay and gave us little pullbacks and could make a few bucks on it. But if I want to be able to hammer shorter because of how much we've gone up or whatever the hell your reason is, I got to respect the trend. The trend is higher. I can short if support levels break. I can short on the way down. I can short if things are triggering to the downside. I can do it with size. But if it doesn't trigger, then I can't do it. And the fact of the matter is, it doesn't trigger. So in fact, I sit here like waiting to get excited every single day that all right, today is going to be the day, guys. We're breaking through that support level. Let's hammer that to the short side. Let's finally get this market ready to break, and then it just doesn't trigger, and that's fine, and that's fine. If it doesn't trigger, you never enter the trade. You don't lose money when it fails, right? And that is a big part of it. I think JR and I both agree that at a certain point something's going to trigger this to the downside, and it's most likely going to be very fast and very furious when it happens. It's going to be a really big unwinding. But I can't tell you right now with the SPY as we're talking, literally making all-time highs, NASDAQ making all-time highs. I can't tell you if that's going to be today, tomorrow, if it's going to be because of a government shutdown or because we saw a headline about a Ukrainian nuclear facility that has 10 days left of diesel engine gas that it's running or something like that before it implodes, or if it's going to be because of the next war, or if it's going to be because of the Fed, or if it's going to be because of Trump, or if it's just it might even just randomly just happen one day, because sometimes that's how it works also. And then you'll see all the pundits in CNBC like assigning reasons for the down move based on stuff that we were talking about a month ago because they don't know what else to say. Sometimes it just all of a sudden, bam, there it is. Something just triggered. The sign just triggered, and it just went. But the bottom line is, I don't need to know if it's going to happen last month, this month, next month. I don't need to know what price the high is going to be. I just need to know, all right now this is my level. If this level breaks, I think I can push downside. If it doesn't break, no harm, no foul, because I'm not pressing it.
Okay, so if we pull, sorry, so if we pull back and we look at some of like the big picture sector trends for the year. So I have on my screen, uranium's up 80%, gold's up 47%, semi's up 37%, friggin' Bitcoin up 26%. Even biotech is starting to like cook a little bit. Like, is it even possible to look for those types of trends? Or is it like, are we strictly at the stock level right now?
You can be looking at those trends and those breakouts. I mean, XBI just broke out and it's beautiful. That daily chart is beautiful. Broke out 3 days ago. I wouldn't chase here, but XBI just broke out. IBB just broke out, and you can still be buying those breakouts for the continuation patterns on them. I can't get myself to stay in them for more than like a day trade. But you know,
yeah. Like, I mean,
trade.
like how are you guys thinking about swing trades right now?
I personally can't wrap my head around new long swings here. I just can't do it, even when stuff are doing it. It might just be my own education getting in my own way, and I wish I was dumber and less educated, and I could just make more money.
Now, but like, because the funny thing is, I feel like we could have had this exact. In fact, I think we've been having this exact conversation for months now. You know, it like, I guess like if you just stopped thinking and bought. Everything would be magical. So JR, so like, how are you thinking about swings? Like, can you even have like any meaningful time horizon right now? JR, are you going to fart or something? You look like you're something in.
It's so fascinating how you talk to a trader, you talk to 5 traders and you get 5 different markets. And I get that running a room, right? I get that from every single one of my traders. This is the best market I've ever seen. To, oh my God, I can't win. I can't make a trade work. Switch my buy and sell keys around. I've gotten that one around a lot too in the past 3 months. I think it's just stylistic. And I wasn't smirking at Derrick. Derrick's a phenomenal world-class trader. I'm just it's just fascinating to me because I've been on the other side of that coin so many times where, you know, the market by any measure is great, and I just can't seem to wrap my style around what's happening. What I've been telling my traders is this is a very, very narrative-driven market where, for the first time in a while, I think the retail crowd has a lot more influence, and so you have these stories that like really catch on, right? And you're like, okay, I'm up 12 points on OKLO or IonQ or some of these nonsense names. I mean, IonQ doesn't even make money, and it had a 100% move in 4 weeks or something ridiculous. And it's just such a narrative catalyst driven market with so much retail money and so much pumping that I think it's really hard to do the traditional post 2009 playbook, which is, you know, the trending S&P 500 with the quantitative easing and so on and so forth, and the FANGs leading the way. The market's changed for now, and it's really narrative driven. That when I trade the S&P 500s, it's very specific phases of the market. After a big shakeout, like we had in the after hours in the S&P 500 futures, where it's very clear to me that they're about to squeeze the shorts off of a shakeout, or when we have a really long extended base, and I've had plenty of like overhead supply absorption. Other than that, I stay away from the from trading the indices, or like I don't really trade NVIDIA so much anymore. But we caught that big move. Was it yesterday? And NVIDIA had a really nice move. Why? Because I was like, okay, yesterday or the day before?
Yesterday broke out.
Yeah, yesterday. So I was like, okay, we may have some like last minute window dressing, and they're not going to be able to hold $186 down. So we took a shot, right? But to me, all of this is like really narrative driven type of trading. The swing trades have been phenomenal for me personally. We just closed CDTX this morning up like 52%. The trades that have been working are really catalyst driven, non-correlated nonsense that especially the newer IPO basis with no overhead supply on really tight IPO bases have been flying. I think you have a whole class of trader looking to take on like really tight continuation bases that just explode, like ALAB and CRDL. I mean, I'd never heard of any of this junk, and we caught giant movers. We were just literally waiting for the first initial leg, get really tight consolidations, you know, overhead supply absorption, and bada bing, bada bang, they fly. So that's been the strategy for me with the swing trades, and it's worked out really, really well. But you got to adjust for every market, I guess, or, you know, size down. I don't know.
All right. We will get into ideas if there are any, but you know, we need to stir the pot a little bit. So this week's big question is, which city in America has the best food? I will give you guys a minute to think.
I mean, yeah, New York City.
Queens.
So obviously New York City.
Is it?
Queens within New York City?
The city of Queens.
Because you can get any type of food in the whole world. Pick
and it's all
city,
the best.
Pick a city, pick a country. You can get it in New York City.
Yeah, the thing is, like, I have a semi-controversial take on this because I think New York has great food but shitty restaurants because, like, good places get crowded so fast. They jam, like, 10 million tables into, like, 50 square feet. So restaurants themselves can really suck in New York, especially, like, so many customers are jerks and torture the staff. So, yeah, I think New York has great food, and Queens is absolutely underrated. But I do think the restaurants here are not very good.
So what's your answer?
It might be Vegas. Because Vegas has so many great places in the hotels together on the strip, plus random places off the strip. Plus, if you want to go to like Chili's or something, like it's all there. The prices in Vegas are ridiculous, but
yeah, this answer is questionable to me. Last time I was in Vegas, I was
you have to be in Vegas, bro.
I got like a $15 crappy slice of pizza on the way out, and I was like, "Is this real life?" Like, I just wanted to get a little stomach filler.
The prices in Vegas are horrific for everything now, like parking, hotels, everything. Okay, does anybody have ideas for, let's call it the next week or so, because time frames are short and nobody knows what the hell's going on?
buy floppy disks. Just buy SanDisk, STX, WDC, ASML, AMAT. These names, they go up 15% a day. Just buy it.
The funny thing is, I have a feeling we're going to come back next week and be like, "Yep, that totally worked. That was a good idea." JR, how about you?
100%.
Buy floppy disks, man. I gotta get that T-shirt made.
There should be an FLPY ETF. I think would really work.
It'd be crushing it. It'd be crushing it in September.
You know what ETF I want to invent is like a no revenue ETF. It's all bullshit companies with like less than 20 million in revenues.
With a float under 2 million.
No, and like those stocks, like if you screen for companies with high valuations and no sales, they've done phenomenally well this year. It's hilarious. JR, you like anything or?
Yeah, let me share my desktop.
All right, we got a hard stop in 3 minutes, so.
Hard stop in 3 minutes. What, are we going to commercial?
No, I got another meeting to go to.
I don't know.
They torture me here. You have no idea what T3 puts me through.
While JR's throwing up his charts, if anybody's listening, I'm in Charlotte, and I'm going to be doing an afternoon meeting live in Charlotte. Guests are welcome to come. We're going to have food and beers after. Shoot me an email if you weren't already invited and you want to come down tonight.
We just took AVGO long here. Anchored VWAP support, bottom of the channel, reclaim the 21. I'm looking for a two-wave corrective here. Right back to 372, top of the channel, $415. We just went along this one a couple of days ago. Z-scaler, still actionable. You had a two-wave corrective lower, a shallow base, break of 294.60, got us long looking for 350. Next, CTRE. I missed the 21 pullback here at 33.36. I'm looking for a tight VCP to form here, looking to get in around 34.26. Your buy zone 34.95. Looking for $43. BTDR. This one already triggered long, but I think it's got room to $25 and $30. Bitdeer Technologies. Rockwell Automation putting in a very nice tight base. This one doesn't do in terms of beta. This is a bit of a steamboat to China. But I really like the April shakeout with the tight narrow base. ATR is about $6.50 a day. It does under 1 million shares a day, but I think this is ready for about a $80 measured move off the 360 handle. So this looks good to me. Watching it. CrowdStrike, we called the pullback long a couple of days ago. Buy zone 41.68, target 627. And 698. Obviously, this swing trade would probably take you into December, but it looks really, really good to me. QuantumScape is seeing a bit of a revival here. You have a rounding bottom after a very, very long multi-month consolidation. I want to see a right handle build here, right side base build, and I'd love to see this explode through $15. This thing looks good to $30, $32 to me. QuantumScape. If you miss UNH, we took UNH long to 309. I think you got another chance to get long here. It's a very, very tight bull wedge. So probably through 349, you have a quick move to 360 with a really nice tight stop. Our secondary target's $400. Anchored VWAP, daily 200. And that's my roundup, sir.
Awesome. And I do believe Rockwell Automation is another 90 stock.
That one was for you.
Okay, all right. That is going to close us out, folks. We hope you had some fun. We will be back next week, God willing. And Wall Street is streaming free on YouTube, so go watch it if you haven't seen it. It's a great movie. All right, everybody, have a wonderful, perfect day. Bye, guys.